Hello everybody, Houston here again. Let's take a look Dow Jones. Let's go second. Okay, so let's zoom in. Okay, what we are expecting is a down theory to take place, which means a 50% correction since the all-time high. If I'm not wrong, we already have the targets. Okay, so it's around 14,750. So this is what we are expecting, but we are not so sure how this will play out, because we know the Fed is pumping $1 trillion daily. But we also were speculating about the possibility of the Fed were preparing the market for the 50% correction and not for this kind of move we had here back in March. Which makes sense, because otherwise what the Fed is doing is just making the monsters bigger. Okay, this is not healthy at all. Well, everybody know the numbers are artificial and etc. So now let's take a look on this one, the main chart. Head back in the day. So this is for 2019, before December. Yes, we had the bull break on November 1st. We had the targets way before. If I'm not wrong, the targets were set on October, and we made the first one. We also made the second one, and then right after we started to look for the bearish scenario, which I made the forecast back on the second week of December, around December 13. And the black line here was my forecast for the crash, which is a 50% correct, because right after my forecast we had this higher high here, and then we had the black swan on Feb 19, which I posted also on the Twitter. So what we know so far, what we have, what's really going on. We had the key number 2080-657 that we broke below a first time and then the second time. Okay, so 28,657 now is the main resistance for Dow Jones, which I don't believe we are going to make there. I strongly don't believe, but everything is always possible to happen, especially when we have the Fed printing machine that's not working non-stop. Okay, so here we also had this level that's very significant, 17,711, that will be, but won't hold if we dump, main support level. Okay, but probably won't hold. And then we have the 50% target for down theory, 14,784. Okay, so around this level here I will watch closely, and around this level here I will bring my trucks to load everything I can. Okay, because the top traders and the old school folks are also looking for this level here. Remember, 14,784. We don't know if it's going to happen, but we believe it's going to happen due to the overbought conditions and the extended nature of the whole move. That's not sustainable. Fibonacci here, Let's measure the numbers. We previous this little guy here is Bitcoin halving, and I will explain later why he's here. So first we had here a rising wedge that broke bearish before it was complete. And I'm not surprised because we know the numbers and the candles behavior are not natural, are not driven by people, it's driven by fake money. Okay, we know, so we don't expect 100% human behavior here. Finish this guy here. So this was our first draw, our first pattern here. That's a rising wedge. Some people will call it a dead cat bounce or a loser sali, lower high, whatever. It's not bullish, it's not looking well, still bearish in my opinion. And right after, we had a scenario here that they are killing, literally killing every bearish picture. Everyone that's about to play or it's around, they crush it and keep going higher. This is like a bear trap. Wipe people out, keep going high. Can be and probably is. And then we had possible, not likely, but possible head and shoulders scenario here. We saw some people shorting here, aiming for this scenario, and then they got wrecked right away. And we were looking for this level as well, 24555.2. Why? Because this point here is going to give us better information if we are going to keep high, and also if we are going higher, also how we are going higher. Okay, because we have to measure try to measure the whole sentiment around it. Okay, not only the candles and the numbers. So it's a tough job here due to the Fed printing. Okay, so now again we are starting to bend, which is not bullish, not good news. And if we draw a speculative pattern, okay, this is speculative, is not ready, is not done yet. Okay, just for the sake of the example, in a better way to look at the price behavior and also the nature of the behavior. So this little guy here is not set yet, which means we can go down, not likely, but we can go down a little again and shape this, and the shape will take this form, and then we go, and then I'm going to tell you, if we break bullish, sorry again, from here, it's going to be beyond the imagination. It's going to be just, I can find words to describe it. Okay, and again, it's not likely because we read what's written, and what's written is bearish. So we can't find a bullish sentiment or a bullish behavior or bullish targets. Okay, we can make bullish targets from bearish patterns. This is a golden rule as well. Okay, bearish patterns will give bearish targets. Bullish patterns will give bullish targets. So we are watching and waiting. We are probably going to short around this date. Doesn't mean where the bottom line here will be. If it's going to be here, if it's going to be a little above, doesn't mean. We are going to look for a short around here, and of course around 70-80.6, 60%. Okay, that's the targets we are looking for now. Besides this, let me see on the daily. We are missing something. Okay, so again, so far nothing special on the daily. On the 3 days, it is starting to look exhausted already. We are also losing volatility here, despite the 1 trillion daily, which I still believe it's one of the reasons. It's too much money for lower the price action behavior is not fitting the 1 trillion daily. We should be seeing a much more aggressive behavior here. Okay, so it's something like is not there, not yet. Okay, back to 4 hours. Let's take a closer look on 2 hours. Nothing special. 1 hour. Nothing. Only the gaps, but it's not worth to take a look. So I think for now this is it. We are going to wait and watch a bit more. And so about the Bitcoin halving bar here, I strongly believe we are going to have a strong move. Can be the down theory taking place around this date, 12 May 12 or May 13. 13 is very significant. And what I am expecting now let's go to the dollar again, and you guys will remember all the info from the previous video, how the things are connected and how we are watching it. Okay, now that one, another one. Okay, so here we don't have on the monthly, we don't have good news for the dollar, not yet. We had this strong rejection here, that's very significant. And again, we make another rally and another rejection. And now we have a shooting star. It's bearish, it's a bearish sign, which can give us a better clue on this scenario right here. Because this one is not only about the bulls making their point, defending this higher low, okay, compared to the previous one. We also know that the fundamentals behind the dollar, countries have to buy dollar, we have the petrodollar, they have to pay their debt on dollar. So a dump on dollar, I strongly don't believe it's going to happen. So we may look for the bulls coming to defend around these levels here. Okay, that's the levels we are looking in the bigger picture. But now let's take a look on the small picture. So we had, yes, we had this bullish candle here, already pursued, and then another rally, a little shadow, maybe 50% shadow, 2 inside bars, and then the bear pierced the previous bars. We can consider a bear break. Now let's take a closer look. Okay, our previous scenario that we talked about in the last video. And now we have that little monster, our bearish little monster. Let's draw the lines. Okay, this one here, it's speculative. And why? Because we still don't have a set pivot. Okay, and how do we know? Fibonacci will tell us. So in order to have continuation from here, which we are expecting, we needed a close or even a breach of 99.6. That is this guy right here. So once the dollar make it there, we know we are going to a 100% bearish pattern. That's the one we are waiting for. That's going to give us this scenario. Just a second, please. Okay. Okay, let's go. So this line right here, trying to measure this pattern, is not valid yet. Okay, it's just a way to like how to measure with our own eyes without have to updating the Fibonacci, the draws, and whatever. Okay, so just a way to quickly measure. But this one here are the perpetuals that won't change until this we have the outcome of this price behavior here. And what we are expecting is what I talked about the last video. We go another lower high, and then we go down. So this will give us a clear target for the dollar, for Forex, for also for the crypto market, and we will have a good idea of what may happen if something happens in the stock markets, also for Dow Jones, because if the 50% the down theory takes place, we are going to see some action and volatility in the dollar as well. Okay, so let's take a closer look now. Okay, so the lines. Okay, I gave a example on the Elliott setup following Fibonacci as well on crypto in the last video. So now I will show you the opposite of the bullish contraction pattern, okay, and why we are expecting it to play. Sorry. So here we had this move that I mentioned for Bitcoin. That's not true, just for the example. And then we have, let me clear this guy here. We have our swing low, high, swing low, swing high, and our swing low again. Okay, so here, if you guys okay, before talking about this guy here, let's talk about the whole picture. So how would this play out? Okay, and this happens all the time in all assets, in all markets. We have the bullish version of a pattern, which means bullish continuation, plays from top to bottom, so from here to here, and the bearish ones start from the bottom to the top, which is this guy here to this guy here. Okay, that's how we can read the nature of the movements, and that's how we can call for the bull and bear breaks before they happen, like days, monthly, days, months, weeks. We can be ahead if the pattern is somewhat clear. It doesn't have to be a full symmetrical. Because as you guys can see, this one here already broke. So it's not symmetrical, it's going to be asymmetrical now, which will be harder to nail this one, but it's still possible, okay, using Fibonacci. So it's like from Elliott to Fibonacci, and then from Fibonacci to Elliott. Okay, just again, select this guy here. So go, swing high, swing low, swing low, swing high, swing low, swing high, and then we follow the trend, the micro trend, that we know the micro trend right now it's bearish. And now the scenario about May 12, which I believe, strongly believe, that's connected to everything, not only for crypto and Bitcoin. We have our bar here. 12, okay, right here. So right now we are expecting, okay, let me make the lines again. Okay, so we are waiting for that pullback, corrective wave, and then we keep going to our target below that I shared in the first video. It would give us this. Okay, let's use a single line just for the sake of the example. Okay, so Fibonacci is going to give us the target for the short, which we don't have yet. And some of you may ask, that's a natural question for everybody. If you know where the bottom is, why you don't long to the target of your short? Now I will explain you why it doesn't work. So I am expecting another leg here, right? So let's take this guy here. Okay, if I make it from this body here without wick to this wick here, you guys can see the bears pierced the floor by a few by 0.002%, which is huge. Okay, it's a lower number, but it's huge. The effect in the markets. So the bears made their point here. They pierced the floor and also broke our and also broke our symmetrical scenario here. So let's say, for example, if I know that we are going to have a valid pivot here and wait for continuation before our bearish target, bearish short, why I'm not longing here? Now I'll explain you. Even if we end up with this guy here, oh sorry, excuse me, even the valid pivot here doesn't give us any 100% chances of success, because we can make the valid pivot and then break bearish right a few hours or days ahead. Okay, so this is trick. Sometimes it happens, sometimes it doesn't happen, but that's one of the reasons we don't jump first. Okay, we wait for the whole scenario to play out before we jump in, because the chances for something outside the charts to happen are very, very low. Okay, so again, we wait for our correction move here. That's the payoff from this guy here. And then we will look for our shorts. Okay, doesn't mean we are going to make to the top. That's one of the psychological issues when we are drawing lines. Okay, we expect the price to fit the lines, which doesn't happen all the time, and this can be a psychological trap for everybody. Okay, so that's why the best reason to do it. Okay, let me make the draw again. We are going to use our best friend, which is Fibonacci. And can you guys see here? We made the sell off our rally, the payoff relative to this move here, and then we came to 780.6. I also talked about this guy here, this level for crypto in the last video. If you didn't saw, take a look. And what we are going to do next, we are going to measure guy here from this guy here, which we had more than 100% retrace here, okay, which is bearish for the dollar. And now we are going to look for our next leg. Probably you close around this level here, and then once our pivot is set here, guy right here give us a pivot, an indication that we are going to go up. What we are going to do, we are going to anchor the Fibonacci, because if I anchor now, for example, it's not valid, okay, it's only speculative. And why? Because the anchor is not ready, not done. And how do we know it's done? It's the same way we know when the pivots are valid, which is a touch on this level here. Once we have a touch here, let's say the dollar make this, we can anchor Fibonacci here. Okay, otherwise it's speculative. You may end up wrong, and if you plan to trade in a wrong setup, you're going to probably lose your position. Okay, so for the dollar right now, we are waiting for some small action here because the volatility is already fading. And right after we have our pivot confirmed, we will look for this last leg up, and then we are going to look for our previous target. If I'm not wrong, was around 9650, around here. Okay, so watch out, check your Delta X-ray Yankee chart, okay, the tag DX Yankee, and watch out for the dollar. Check the confluence, the correlation for stocks as well, and crypto. Okay, I hope you guys enjoyed this video, the information. I really hope it can help you on your technical analysis, on your improvement, on the way you read, on the way you write, and also your trading setup as well. Okay, I really hope you have a great day or a great night. I really hope you are having a great time with your family, with your friends. And don't forget, smash the like button, share with your friends, and subscribe. That's the only way you're going to support me, so I keep going videos like this. Okay, thanks again. I'll see you guys soon.